Hey, remember, it wasn't that long ago that we had the pundits and everybody out there talking about home values, right? There was a crash in the market. Home values were going to plummet down. What are we seeing here? 5.5% year over year. Who knows where that shakes out, right? Is it 5, 6% this year where we see home values going up? I actually have an email here from one of my clients, and they've got, 2025 active clients out with pre approvals looking for things, some making, offers every day, and they're losing out left and right. Offer of 270 on a list price of 270, no inspection, lost out to 285. List price 260, offer 265, lost out to 270. List price 329, offers 336, lost out to a cash offer at 340. I can go on through the list of his, pre-approved buyers that are out there trying, actively making offers every single day. And a couple of things that you need to kind of look at and remember and really urge your clients as we see interest rates come down. Now I'm right, like I'm not some chief economist, but as we see interest rates come down, what you should see is some more inventory, right? There are people sitting on the sidelines, not listing their home because of the fear of interest rates. So what that's going to do, it's going to add some inventory to the market, but it's going to also flood it with new potential buyers now, new buyers that are sitting on the sidelines that now become eligible at those lower interest rates. There's something that I made a while back. It was like a why wait spreadsheet, and I'm happy to share this with you. Just comment, I'll email it to you if you want it. But if we just look at, and I think that it's a pretty realistic assumption here to say that home values may appreciate 7% over the next year. A house that you would go out and buy for $400,000 today, let's say you put a 20% down payment, that's 80 grand. You'd have a loan amount of 320, even at a 7% interest rate, you're looking at a $2,100 payment. If you were to wait 12 months, let's say for interest rates to come down, let's say to a 5, at that point, if you're now going to pay 428, you're going to lose out on $28,000 of equity. You're going to have to bring in at that time, instead of 80, 85,000. So you're going to bring in an extra 5,600 bucks, and your loan amounts that you're going to borrow is going to end up being $22,000 higher. So while true, you will save 290 a month in interest, you're going to spend a whole heck of a lot more money at that point to get it. So is it really worth $3,400 in savings on mortgage payments to lose out on $28,000 of equity? That's the question you need to ask yourself. You need to be educating your buyers. It doesn't matter, right? There's a supply and demand problem. You've got to take that into consideration. If you have buyers on the fence today, get them moving today. You can always refinance. It's going to become harder and harder to find a home.